Welcome to another deep dive edition of the Chicks on the Right podcast. Very, very glad to have a special guest with us. Phillip Patrick from Birch Gold is with us to tell us about some things in the economy that people might have questions on as it relates to gold and other precious metals. And we should mention, too, that Birch Gold is one of our favorite sponsors of the Chicks on the Right podcast. We're very, very glad to have you with us, have a representative of Birch Gold with us. And the first question I think we have for you, Phillip, because we see, I know I do, if anybody's watching Fox News, you probably see 3 or 4 different gold sponsors or companies on your television set almost all the time. So if you could explain a little bit more about your role and then why people should think about Birch Gold specifically, that would be great.
Of course. Look, I'm the manager of Birch Gold Group. We are one of the largest precious metals companies here in the US. You're seeing a lot of gold companies out there, of course, because of the climate that we're in, right? We have a tough economy now. People are starting to feel it, and gold is very much a solution for a lot of the problems that we have. I would say what sets us apart at Birch is really the desire to educate. I think when people make right decisions, they do it from a very informed perspective. So a big part of what we try and do is educate people. We have a lot of information kits. We've got a lot of people like myself at the company that are there to guide people through, hold their hand, and make sure they're making decisions, like I said, from an educated perspective. And I think that really sets us apart.
So you talk about education and the economy with, at least for me, and I know I speak for a lot of people that watch our podcast, the economy is really confusing to a lot of people these days because it's scary, but it's also really confusing. So what do you make of it, and what should we be looking at with the economy right now?
Look, you're not alone. Paul Krugman said he's confused by the U.S. economy, and this guy's a Nobel laureate. So if he can't work it out, I don't know, what chance we have. It's a very confusing situation because we've got two forces, right? On the one hand, we've got an S&P with forecast earning forecast rising to 2.5%. We've got a jobs market that continues to be solid, unemployment very, very low. On the other hand, though, we've got big box retailers reporting weaknesses in big ticket sales. I saw a study recently that an overwhelming number of veterans can't make ends meet these days, and they're not alone. Inflation at 6.4% has been outpacing wages for the last 23 months consecutively, and right now, and obviously there's a correlation, credit card balances are nearing all-time highs. So taken together, I think we're seeing a picture now of everyday Americans really struggling to pay the bills, falling further and further behind every month. So the overall picture I don't think is too promising at the moment.
Okay, that's kind of depressing. Is there a single story that you think encapsulates what we're seeing in the economy right now then?
Yeah, I'm very worried now that I'm going to continue to depress you because economically, I know, economically there's not too much. But look, the housing market, I think, is a really good thing to look at. Economically, it's a very sensitive industry. This week, mortgage applications fell to 28-year lows, and that's because interest rates are shooting up. Right now, mortgage rates are like 6.1%, and people can't afford houses. Remember, during the pandemic, we saw house prices soaring, right? And today, the mortgage rate's almost double where it was just 12 months ago. So, mortgage rates really causing a problem. House prices now starting to drop, right? 13% down nationwide. Home sales now down 37% versus last year, which tells us that inventory is piling up. Now, this is important. Housing and residential construction account for about 1/6 of total US GDP. In the last couple of years, we've seen a housing sector going from boom now heading towards bust. And it's important because housing is a bellwether for the broader economy, right? It's less liquid than equities, so we don't always see a direct correlation. That is until stock prices drop between 20 and 30%. When that happens, it's usually the catalyst for more downside in the housing market. Now, we haven't seen that yet, but we're down about 15% in the last 12 months. So we're getting close, and it's not looking great.
So it's going to get worse? You're saying things are going to get worse?
They have to get worse before they get better. So there is light at the end of the tunnel. How long that tunnel is. There is silver lining. I have silver lining.
Mm-hmm. Well, so does that mean does that mean that a severe recession is like best case? We're actually hoping for that now. Is that right?
Look, as long, let me phrase it like this. As long as inflation stays high, the Fed have to start or keep raising interest rates, right? In January, we saw inflation start to tick up again, which was really concerning because the Fed were feeling like they had a handle on it. And in January, we started to see prices go up again. It was at 6.4%, which is over 3 times the Fed's target. So essentially, they've got to keep raising interest rates to bring about a recession. Look, this is the thing. Part of high prices is high prices, right? You can't, for example, housing is about 30% of people's expenses, right? So if you want to bring inflation down, it means house prices have to come down, right? So we've got to have an element of crash to bring prices down. The other alternative is they just give up the fight, right? And they just accept this new norm of, permanently higher inflation. But it's really tough. Listen, the last time inflation was this high, 1982. And the Fed had to put it's 40-year highs now. It's crazy. Yeah. The Fed back then had to put interest rates to 14%, right? Oh my God. Today, mortgage rates are at 6, right? If they got that high, you can imagine what that does to the housing market. So for me, it's this sort of no-win scenario. Best case scenario is they raise rates, we have a recession, we get through it, we get inflation under control. The only other alternative that I see is that the Fed pivot, they lower rates, and inflation goes through the roof. So
Mock is getting ready to build a house, and so I can see her ready to throw up. Like she's like,
I know.
She's like, oh my God, it's like that is just
because this was the year that rates were supposed to come down.
I know,
and so this is not good news for me.
Not good news.
Some tiny good news. I'm building a house too. That's not the good news. It means I can share your pain. Construction costs are coming down a little bit, and that's because they shot up so much. We're starting to see a decline.
Well, there you go.
There we go.
There's some good news. There's some good news for you.
I don't know if they've come down enough to offset the rates, but
I didn't want to say that. I didn't want to say that, but
Well, then, as a representative of Birch Gold, how would you recommend that people protect themselves, just from the effects of the recession, from the effects of inflation, from the effects of all of it?
Okay, so first things first. Information is key, right? And for your listeners, they text chicks to 989898, and that will get them access to an information kit. That's the first place to start. But look, precious metals for climates like this, they work very, very well. And the reason is they're safe haven assets. So the problems that we have out there actually are positive drivers for safe haven commodities. So to explain briefly, when stocks crash, a lot of the time safe haven demand goes up. Gold and silver go up. If you look at the last recession in 2008, it was good evidence of that. Stocks dropped 50%. Gold and silver actually doubled within 18 months, and it was driven by this demand for safe havens. Same goes with inflation, right? Everyone knows what inflation is. We feel it every day. It's when things become more expensive. But actually, it's the rising cost of commodities and services. What are gold and silver? Commodities. By definition, they increase with inflation over time. So they're a very good way for people to hedge some of that exposure. If you're seeing losses to inflation on one side, perhaps mitigate some of that with precious metals on the other. So they're a really good hedge in climates like this.
Fantastic. That's great.
So tell everybody again how they can get information and what exactly they should expect when they text to the number.
Of course. So they text chicks to 989898. And what that will give them access to is a free information kit, I think 25 pages or so. It'll talk them through how to purchase physical precious metals in cash or tax deferred within a retirement account. If people have IRAs or eligible 401ks, we can place physical metals tax deferred within those accounts as well. So again, it's text chicks to 989898, get informed, and then make your own decisions from there, is what I always say.
Well, Phillip Patrick from Birch Gold, it was a pleasure to have you break all this down for us. I know it's good information that our audience will appreciate, so thank you.
It was my pleasure.